Okay, morning everyone, hope that works. Thanks for the very kind introduction. I should of course, given my compliance people follow me everywhere, point out I'm not a banker. I'm actually an equity analyst. So that means our external clients are pension funds, hedge funds and so on. I'm also an analyst with a bit of man flu as well, so I don't always sound like this, but hopefully, if you have any questions afterwards, maybe email me rather than talk to me in person. But anyway, hopefully you'll escape unscathed. So I first must apologise for the awful title. This is something that one of our traders thought up a few years ago, and after the initial hernia of laughter it caused, we've got to use that at some point, we have to. And we actually had a report on this last year called this. Interesting, when you market these sort of titles around the world, you realise you certainly date people. There are people who don't get it at all, people who said, what a load of rubbish. People say, oh, I really like them. Like, anyway, I won't tell you which category I'm in. But anyway, so this is, as you had in introduction, we're giving a few views on the seismic industry from my world, from the financial world. I guess we look at all the listed companies, so we don't look at some of the small guys in new technology. It tends to be the big guys like PGS, Western Geco, TGS, CDG, and so on. But in this, I think we tend to focus a bit more on offshore seismic than land, because that's really what the larger companies have spent more money on. Put it very simply, boats cost more than cables. But in the overall picture, I think one message in this is that we're at a point of change at the moment. So the industry feels rather in balance. It feels rather that in the next 1 or 2 years, if there isn't continued growth in activity, there might be a few too many boats around. And I'll develop on this theme a few bits as we go through. So here we are, this is what I want to run through today. I'm going to go through a few of the classic known knowns and known unknown scenarios. And this is just painting the big picture. The charts are quite busy, quite a few charts here and there to look at. I won't go through every detail, but this is just to put into place some of the framework behind how we try to work out what earth's happening in the seismic. I mean, we have a tough time working out what drilling rigs are worth. When we come to seismic, it's much, much harder for us. There's not a lot of lead time to see what's coming around the corner. We'll look a bit more detail about actual demand and supply and a few of the big drivers in the seismic itself. And then we'll run through a few challenges before we wind up. So one of our anti-heroes here, I mean, we've used this quote so many times in our research, we should probably pay him some money or something, but it's the whole known unknowns and unknown knowns thing seems to really encapsulate many of the questions we always face all the time. But in this context for seismic, big picture, obviously oil prices, level of investment for oil companies, some of the big drivers like offshore rigs, how many are there, and what work is coming in Subsea and so on to see how important offshore is, and then start looking at license rounds. And these 5 issues here, which I'll run through very quickly, start to really put the big picture in place. So the first thing, you might call the known unknowns, I suppose, oil prices and capex. So the oil price picture here. Now the top left chart is the famous production from shale oil. The top right one is how important North America is in terms of production growth. So you can see how dominant the whole shale oil theme is. And this is the current, actually not quite current, it's about a month old, Brent forward curve, so coming down to roughly $90. Now, all I'll say in this picture is we're not particularly worried about oil prices. We do think they will come down a bit from where they are now, but that's really reflecting the fact that certain areas that have been offline, like Libya, Iraq, which have been underproducing, maybe even Nigeria, if you never know what happens there. But there are 3 or 4 places around the world that are probably underproducing right now. If those come back in the next 6 to 12 months, we think that'll certainly depress Brent down to around 100, maybe 95. Not a big change, but a little bit lower than it is right now. But I guess more importantly, given how many media column inches have been given over to talking about shale, we don't think this is going to come on ramping up all the way up there and swamp the world with shale oil. We think the US is going through a very, what's the best phrase, industrializing the whole process of getting oil out of the ground, oil out of shale resources. We think this curve's really going to flatten off, and you're going to see the next phase of the growth in terms of production are going to be much, much more gradual. Interestingly enough, of course, shale oil is not cheap. I think something that often the media entirely missed is the other side of the coin, is you need 60 to 80 bucks to get it out of the ground, quite similar to some deep water projects. So as you saw with shale gas when that overproduced, if this does overproduce, you will see the activity really slow down quite quickly over a 6 to 12 month period. So oil, not really a problem. You wouldn't see this as being a concern about what's happening offshore particularly. So looking at spending, the top chart is the overall capex of the whole E&P industry. Just over $600 billion currently, and not too much growth from that level, but sitting at quite a high level. The lower chart is more exploration and appraisal spend. So, but both these have actually increased a rather similar amount, over 50% up over the last couple of years versus the last cycle. It seems quite healthy, or more than healthy actually. But both of them are flattening out, and both of them are going through a bit of a plateau at the moment. And of course, it's harder to predict the exploration E&A spend than it is this one. But if you add up all the plans out there from the industry, Both are really flattening out. And so you've got a bit of a plateau of spending. So at a very high level of activity, but not a lot of growth. So there's certain issues in this. And I'll come back to this, but if this spend doesn't grow, even if it drops maybe 5%, then there are certain assets in the market, both in drilling and in seismic and in subsea, that will start to depress the pricing in the markets they operate in. And so there's a potential moderate oversupply coming in the industry, from the service industry, if this doesn't grow. I guess behind all this, I would say that one clear theme, offshore is growing more than other parts of the industry. So in this mix, offshore is still growing somewhere between 5 and 10% this year, maybe more like between 7 and 10% in the medium term. Now that's certainly less. If you asked us 2 or 3 years ago, we would have said, oh yes, subsea's a double in 5 years market, 15% a year. That's not really the case now. So it's clearly going through a period of slower growth. If you believe the long-term offshore story, which we do, then if you zoom out a bit further, 16 and 17, things probably look quite good again. And you've actually got maybe a bit of a pause in terms of new awards in 14 and 15. Then you've got catch-up time when the world really gets going again. So onto the known knowns, and looking at the rig fleet, looking at subsea, what's happening in subsea, and also looking at license rounds. Better. So rig fleet, nice big fancy new semi-submersibles from the likes of Seadrill. So we're very interested to see how the population of these rigs is moving in the market. And unsurprisingly, it's going up quite a lot. It's almost doubled since the last cycle. If you look at what the current new build fleet will bring in by 2016, almost doubled versus the end of the last cycle, and up something like 25% over the next few years. So there's quite a healthy amount of growth in that. Now, it's good and bad. Obviously, if you're a rig owner, as you're seeing in the market right now, there are some concerns about how many contracts are going to be filled for all these new rigs coming in. And there are some without contracts. There are quite a few rolling off. And right now, there's a record number of these deepwater assets that need work in the next 2 or 3 years. So from the operators, we feel that there's much less urgency to sign up these rigs. Hence, there's an issue about rates in terms of softening. But in terms of availability of the asset, in terms of actual offshore activity, it's probably quite good, actually. It's quite helpful, because there is, you know, back here, we know there's quite a big bottleneck in terms of the availability of these assets to do the work. Now there probably isn't really. So this tells us there should be more offshore activity. One of the blocks has been removed, or partially removed. I guess I said if you're a driller, there are some issues in terms of what rates you might see. And as always, it's down to a bit of who blinks first in the next few months. But in general, helpful. Subsea, nice big fancy bit of kit from Technip. These are just a measure of how much work has been booked by the subsea companies in the last few years. It's a pretty tremendous growth, actually. The overall backlog up 35% year on year, that's late last year. The equipment numbers are up almost well over half, actually. The installation is up about 25%, about 21%. So there's actually a lot of work's been booked. And there are some challenges in this. Certainly the equipment guys have not seen this growth reflect in their bottom line yet. If anything, they're facing a few additional costs in terms of how they handle very, very high deliveries of subsea kits, BOPs, manifolds, and so on. So these guys are not really seeing the expansion of margins you saw in the last cycle yet. Might not see it for a few years. Installation, likewise. There feels to be there's a lot of this group, like sort of Subsea 7 and so on, have picked up the odd problem contract here and there, which has held back margins in Brazil. There also are a few odds and ends with Technip in terms of getting new vessels working on time and so on. So they're all going through a bit of they're all very busy, but not making margins that they made back in the last cycle. So there are some concerns there, at least in the near term. And certainly the concern from our markets, given our clients always want to see the next step, you know, what's the next level of growth going to be and when's it going to come and so on, is really the speed of order intake. And having had this very rapid growth, we think we're in for a bit of a flatter year this year. And you're down to 1 or 2 or 3 really big jobs like Total's Block 32 in Angola and so on, so multi-billion-dollar subsea. If that comes through, then this number is probably flat to up slightly. If it doesn't come through and gets delayed until 2015, which isn't what we hear in the market, but if it did happen, then you're looking at a down year. So in terms of a financial guy like me, share price terms, doesn't look too exciting. But anyway, but in terms of activity, it tells you that offshore is really going somewhere. I won't go into this in detail. Thanks to TGS for producing these very, very nice little pictures that we quote very widely. But it certainly gives an impression of a very healthy industry in terms of some good announcements around the North America, North Sea, Arctic, Brazil, and hoping to see good news from Brazil and Africa and so on. I'll come back to this a bit later, but in general, the volume of work out there, the number of license rounds and so on looks to be quite supportive of growth, especially for the multi-client side. So let's go look at a bit more detail. The backdrop here, I think, if I correctly remember this, I think this is Johan Sverdrup, but I'm not quite sure. I guess most people in the audience probably know this much better than I do, but the backdrop, I think, is the famous find in the North Sea. I want to run through license rounds, what's happening in exploration, and also looking at the fleet growth, which again, so coming back to the point I mentioned at the beginning, this is the bit that we have some questions about in terms of its impact on the industry. So the same picture again, I won't go through it, but just to highlight it, this is a very important feature we look at right now in terms of getting like a 1 year, 9 month, 12-month view as to what's happening in the industry. The license round activity looks quite good. So that's one tick in the box. So a different view of it from Polarcus, the little dots of their boats. So we're really looking at the green ovals here, where activity is coming. It is very much, it's Arctic, Barents Sea, North Sea, and very much the Atlantic region of up north and south, and a bit of East Africa. This side doesn't look quite as active, which we'll see in a second. If we roll on to some numbers or some pictures from our friends at PGS, a bit more detail as to what's coming through. Now, I won't go through every single region here, but certainly the activity around Africa, both pre-salt and East Africa, is obviously very, very, very strong. Brazil, after many delays, is going through the effects of having had its license rounds in the north side, and we're hoping to see more coming in pre-salt in next year. A lot of activity in the US Gulf, return of some of the high-end wide azimuth seismic, which is obviously been very key for the industry, making some good money. And of course, offshore North Canada. The Alaskan side sounds a bit tricky at the moment, given the Shell's postponed some of its work up there, but that's only one region. The Asian side is clearly less. I mean, there is, as you know, there's been some delays in Australia. The licensing of the license rounds has been a blockage to activity there. That looks like it's coming back a little bit. TGS is doing some work there now. But in general, it's a bit less in this region. There is some, but it seems most of the excitement is rather to the Western Hemisphere. So, have a look at what this means in terms of growth. This is the overall activity. The top chart is the overall amount of 3D acreage shot per year in thousands of square kilometers, and it's gone up a pretty long way. It's almost doubled. It's the last few years versus the end of the last cycle. Not quite doubled, almost doubled. Again, looking at the predictions, rather flatter outcome in the next few years. So maybe not as much growth at all in the next 1 or 2 years in terms of activity. This lower chart is a measure of the acreage shot per streamer. Obviously, the number of streamers has been going up quite strongly. This grew post the credit crunch, but has been plateauing for the last couple of years, and we think may plateau and maybe even go down a bit further. And this number falling it doesn't guarantee that the industry sees weaker returns from offshore seismic, but it might do. And this is one thing that we do follow quite closely. And it's certainly, if this line doesn't grow and the supply continues coming through as we expect, then these numbers imply to us that with a stagnating volume growth, there are questions about how much money the seismic guys will make in the next few years, at least the marine guys. So just looking at the multi-client side, and just taking a bit jump away, this is it is one area that we find notoriously hard to forecast. It is. I think many guys in the actual industry have said to us when they've done some time in multi-client, then come back to contract. So thank God for that. Back to an industry I can at least look in the next 6, 12 months and see what's coming now. But nevertheless, we have to have a go at it. This is just a measure of what's happened in the last couple of years, few years even. So this is the current multi-client data library as reported in the financial numbers from these main guys here. So it's been growing pretty steadily, really, since 2010. Small drop off at the end of 2010, but really been growing pretty steadily since then. And the ramp up here is very much some of the big work in West Africa, pre-salt, some of the work in the US Gulf coming through that's increased these balance sheet values that the companies have to record. This is the year-on-year revenue projection, or this projection, try again, performance rather. So you can see a very obvious cycle going through 2009, obviously after the credit crunch. But multi-client's been doing well, actually. Apart from 1 or 2 quarters, it's generally outperformed contract. And there are some reasons behind this. There are a couple of structural ones. Things like the fact that there's been some pseudo-contract work in West Africa, in pre-salt Angola and so on, and some also in Uruguay, where you've had very high-level pre-funding, but not necessarily a high expectation of any late sales, really, to speak of. So this has boosted these revenues, especially during 2012 in Angola. But nevertheless, still very good, and good money for the guys that did it. So well done for them. There's also, we think, a bit of a structural change, even versus the last cycle. There seems to be more this connectivity between trying to link up all this stuff and geology and geophysics by some of the big players. And this is really dragging the multi-client approach into being a much more of a mainstream model rather than simply what you do when your boats aren't too busy, which it was obviously maybe 15 years ago. So this is becoming, and if you look at the performance of these companies, TGS, if you go back to the last cycle, TGS was somewhat smaller than PGS, its vessel-owning Norwegian cousin. If you look at where things are now, it's somewhat larger. And they've had a fantastic run for the last few years, which will probably continue. So let's jump on now to just to pick back to the vessels again, back to the boats. So this is the streamer count, continual growth since 2004. This has obviously been driven quite dramatically by the new boats that have more streamers than the old boats, so there's obviously a certain scaling factor in there. But these are the market shares as to where we are in terms of the fleet. So 2012, this is shortly after CG bought Fugro, so this actually is somewhat smaller now. Obviously, some of the boats have been let go and so on. But nevertheless, what you can see through the last few years, many of the smaller players have been absorbed by the big three in one form or another. So the big three have kept their 70% share of the whole streamer market offshore. This is changing a bit in the next, they haven't lost a lot of share, but you are seeing, as the market grows in the next few years, you are seeing some of the second tier players, Polaris and Dolphin in particular, get back to positions even bigger than they were in the past. And this others also are Chinese, and this is an interesting one here. It's not always all that clear what the offshore marine side of BGP or China Oilfield Services or a few others are doing. And there are other boats that could be ordered in this space in the next 1 or 2 years that could increase this further. I don't think you're going to see these guys look to buy these guys in the same way that they did a few years ago. So you've got probably a market that becomes a bit more, it looks on paper in terms of simple streamer count, more diverse. But what is changing though is that the boats these guys have, the big three, especially PGS, the boats these guys have are very different. Now, not all of them, and this is the key thing, the mixture of vessels you have, if you're an offshore contractor, is hugely important now when you have an arrival of many very large 18-plus streamer vessels at the very top end that are hugely more efficient. This is what I'm going to talk about right now. So in the next section, looking at some of the challenges, this is the whole streamer effect. So if you look at where we are now in terms of a picture of the whole fleet, you mentioned this is the same chart in terms of streamer supply. This is what this is a slice through some of the 3D vessel markets. Back here, they're all doing surveys. Go through here, an increasing number of them are doing source work, they're doing ocean bottom work, they're basically supporting other work elsewhere. These do not make the same money as these. So, putting it very crudely, if your fleet is mostly this, then you make margin of X. If your fleet is a mixture of that and that, then you don't make that number. And that's what we've really seen in the last few years. PGS, which has a lot of big boats in this section, makes margins not 30% or more. The other guys are struggling to make 10 or 15, and in some cases less than that. So they want to actually own vessels. So there is quite a spread between these two. And what you're seeing is as we have seen in the rig fleet, is a move towards retiring older boats that just don't make any money, 6 to 8 streamer vessels that really can't compete with something that tows more than twice the number of streamers in the water and is fully compliant with new standards and so on. So we are, as one company said, we're saying goodbye to many of the old ladies in the fleet. I think this will just the start of this. I think there'll be a lot more of this to come. And it's really, on this one, so we'll come on to this in a second when we look at the technology side, but I think this is a key change to the industry, is how these vessels will arrive and impact the market. One other issue in terms of a risk, which is more, I guess, a vessel management risk, just the seasonality of the market. Everyone knows the North Sea is very important. This is what it used to be like in terms of a boost around the middle of the year, maybe Q3. Now it's broader and wider and taller. And this is, we've seen it the last couple of years, especially last year. This tail end, these shoulder months, especially this Q4 one, does cause some real challenges in terms of a lot of vessels, 20, 25 vessels, chasing out of the North Sea and looking for work elsewhere, whether it's in Africa, US Gulf, or Asia or something. And most of the guys we look at have had issues. And this has been quite a, I can't remember the phrase someone, it wasn't a nightmare, it wasn't so much a nightmare, it was a sleepless nights rather than a nightmare. It wasn't real panic stations, but it was certainly not a nice period going into Q4. What you've seen going through it though, again, the guys with the best vessels were booked up sooner. The guys who didn't have the vessels or were smaller ran into the start of Q4 with perhaps half their fleet booked, which is a pretty unnerving position to be in. They got through that now, but this feature feels like it will be one that will persist through most years, so long as the North Sea remains this strong. For us as a financial guy advising investors, this means, as one possibility, that you always want to buy in this part of the year, because this part you're getting more and more excited about how good Q2 and Q3 might be. Once you get past the half-year results and go into September, October time, the main number you're worried about is probably how bad Q4 is going to be. So it may well be that Seismic, from an investing point of view, is going to be chasing this momentum here, then having a break and coming back the next year. But let's see how that pans out. So back to the technology theme, technology versus geology. So the two quite important trends here, which all feed into the whole vessel mix argument. This is how much broadband's the grey bit, red band's conventional, been growing quite strongly, as PGS's numbers. This year, you're looking at being roughly half and half, maybe even more broadband than conventional. The size of surveys has been sort of similar for a few years, but really took off in 2012 and 13 and looks to be growing this year. And this tells you broadband and large surveys are really where the volume is going to be at. Again, this really implies certain types of vessels will have certain types of advantages and others won't be able to compete, which really helps separate the whole industry that much more. One other question with this is that, I mean, from our point of view, do we really value this? Does the financial market, investors or analysts, actually understand or care about technology? Because from one angle, as we often hear from some of the users of the technology rather than the owners, broadband's broadband, and as long as you use it, it doesn't matter who's you use. And then maybe there's 10% of the market you need to have the very, very best, like the cross-sampling from Isometrics from Subsea. But other than that, you can probably use anyone's. And therefore, how do you differentiate it? And I think many of us have become quite blasé about how important new technology is. And when you hear some new streamer announced, like, oh, that's very nice. And you go to Oceanology and see some new multi-component streamer or some new land kit, it's like, oh, that's very nice, okay, right. But it doesn't, none of us really come back and actually change our views of the company too much. So what this comes down to for us is the technology in terms of the boats is far more important. So these big monsters and PGS, which are clearly built for efficiency, not speed, if you know what I mean. This is just an indication as to how the efficiency of a survey changes if you do this is a theoretical model, but a 10,000 square kilometer survey, you know, it takes roughly a third as long as a 12-streamer boat, or a third less time rather, maybe half the time of a 10-streamer. So there's a huge efficiency gain by using something like this. This can total even more than 18. So it may not do it all the time, but could we be even looking at another column here in a year's time where these new Titan class Ramforms and PGS will be taking that next step forward? So this is really the key thing in the industry, as we see it, is in a stagnant market where there's not too much growth, and there are some pressures from the oil companies in terms of the growth of spending and discretionary spend and so on, these boats make good money, other ones don't. And if your fleet contains quite a few of these and a few other ones, as opposed to rather more of the medium-sized vessels, then there's a huge difference in your bottom line. So one last one, looking at technology, and this is, I guess, where I'll put my hands up and say, I find it very hard to value the contribution of some of these new bits of kit. I understand how they fit in, but in terms of putting a number on them, it's quite difficult. Now, this is not meant to be a Sercel advert. It happens that their pictures are more easily available, but anyway. This is the new multi-component streamer from Sercel, launched the EAGE this year. Their seabed system, the existing Sea-Ray seabed, this actually is linked to the new seabed joint venture with Fugro. And this is the new PGS optical system they're testing with Shell at the moment for land, which is quite interesting, which is something that's going to be developed this year in the Middle East, and we'll see where that goes. That could be quite interesting. I know there have been many attempts to use optical systems before that haven't always worked out, but I'm very interested to hear anyone's views on that, either after this talk or over lunch and so on. But in this, I guess, looking at the big themes, we all know that moving to 3D was a huge, huge move. The moving to wide azimuth and so on was also a pretty big step. Now you've got the cross-line sampling for true 3D with Isometrics. You've got claims of being able to do something similar from other guys as well, but it sounds like Isometrics is very much ahead. That's what we hear from the industry. I guess the question for Ryan is really what's next. You know, are you going through a bit of a stable period where there are lots of interesting ideas that don't really transform the industry, or are there actually some quite interesting ones coming where maybe Ocean Bottom, maybe the Fugro joint venture is onto a good thing? Just won a $60 million contract with Petronas for some monitoring services. Maybe this is something that could prove disruptive if it can be made cost effective versus the marine towed streamers. Let's discuss. So that's the last bit on there. So as a simple, there we go, a simple wrap up, without going through it in detail, I guess we see there are certain big picture issues like oil prices and investment levels that tell us that it's not panic station at all. It looks like you're remaining at a very high level of activity, but there isn't a huge amount of growth from one year to the next at the moment. So you're down to mixed, you're down to what boats you have, you're down to who your clients are, where you operate, and so on. And that difference is going to be very important in terms of where people's bottom lines end up for 2014 and 2015. I guess the challenges we see in this space, given quite a good growth in terms of multi-client activity and license rounds, the challenges really come down to the assets. If there isn't growth, the new assets coming at the top, very much like you see in drilling with all the new drill ships coming from Korea, the new assets coming at the top, displacing older assets at the bottom, and the curve of cost efficiency and so on really, really favours the new stuff. So what you will see is that if supply and demand move a little bit out of favour, then the guys who are not well positioned will really see the effects. And people like PGS, will probably sit there making pretty good money. Maybe not growing very much, but certainly making good money through the next couple of years. That's the overall picture. So very much we see a demand for data, and then this industry remains very, very hungry for data. There's no question about that. But we think the next 1 or 2 years for seismic, from our perspective as an investing advisor, whatever the phrase is, you have to be quite selective about which stocks you buy or which areas and themes you try and target. So thanks for your time. Any questions? I'm sure we can catch up afterwards or whatever. So, okay, even time now.
Thanks very much indeed, David. That's a perspective which I think we needed and very useful for us. So anyway, first question for David. Probably quite a few.
Maybe not.
Not. Well, I'll ask the first one. What do you think of the unconventionals? You mentioned it a bit at the start, but what about unconventionals outside the US? I'm thinking particularly of the UK, of course, but what's going to happen?
So in terms of just taking a very broad picture about supply, about where the next supply is going to come from, the potential for shale outside North America is very much more gas than it is oil. There is some oil in Argentina, which Repsol is chasing, and a few others, but there is a huge risk about how you can get those oil dollars out of the country, and that is a big challenge. But apart from that, most of the opportunities outside North America are gas. So we have obviously a bit of gas in the UK, people will allow it, but in Europe, similar question. China looks very interesting. Australia, very early stage, but there is quite a lot in the central basin in Australia. And of course, some in South Africa, some in Russia, some of the shale oil in Russia as well. It's quite widespread, but if you had to guess, the next ones that are commercial are probably going to be either China or Australia. China, so far, the results have been a bit mixed. So I think that the commerciality of they've done quite a few wells, but the commerciality is questionable. Plus, you have all the infrastructure challenges of being in the middle of nowhere and so on. The shale elsewhere, very early stage. And look at the Russian shale oil, the Bashanov shale in the middle of Russia, potentially huge reserves, but you're probably 10 years away from seeing that being a proper commercial source. So you've got 10 years of decline rates elsewhere before you get near to see that filling any gap. So it's for the moment, the commercial centre of shale activity is North America. It will remain so for several years. There'll be a lot of excitement and I think that the government, it's always in government's interest to promote energy security and energy self-sufficiency and so on. It's actually a rather bad correlation with countries that have become self-sufficient. They nearly always become rather unstable afterwards and have funny things happening. But that tends to be missed out, as is the cost of these things. And the shale, as I mentioned very briefly about the North American stuff, shale isn't shale. The shale is a huge range of rocks, as it is in any other category of geology. And the stuff they've done so far in North America is the stuff they've known about for donkey's years. The next wave of stuff you're doing around where you found is less good, less commercial. There is a nice technology growth curve behind that helps you. For instance, like the cost of some drilling is probably half what it was 2 or 3 years ago. Nevertheless, you still need $80 to get the stuff out of the ground. So it's not made the stuff very cheap so far.
Well, thanks. Yeah. Andrew Wright. Microphone coming.
Do I need it? Andrew Wright. Can you say anything about onshore seismic markets and also onshore seismic technologies? Because most of what you said was about the marine market.
Sure, absolutely. No, it's a good question. I think the onshore, as I said, we don't look at it as much because it tends to be either a smaller part of the guys we cover or not at all. And PGS obviously sold theirs a few years ago. CDG is quite small and downsizing. Western Geco is quite large, but again, is a relatively niche business. The largest guy out there is BGP, which is privately owned and hidden away in CNPC somewhere. So good luck seeing what they're doing. So, but in that overall picture, land seismic is clearly growth in the US. There's a great demand for microseismic and so on to help understand shale. And certainly, I think the link between the seismic study of fracked reservoirs and the coring analysis that the people like Core Labs do, that is very important. And that understanding to work out exactly how shale reservoirs are working is very important and a huge growth area. As we understand it, that understanding is rather weak at the moment. And I think, as some of the Core Labs guys have said to us many times, you ask your average sort of 10 horizontal well fracked project in the US, that you ask the guy, how did it work? It seemed pretty good on schedule. Well, actually, 8 wells were rubbish and 2 were fantastic. And you have no idea that that's the variability across all the wells you've been drilling. So that bringing together of the geology, geophysics, and everything else is very important. The other growth, of course, is apart from the continual ramp up in channel count we see around the world, is the Middle East. And in the Middle East, there's a huge effort in Saudi chasing tight gas, which is it seems bizarre, but the region is very, very short of gas for their own power consumption to cool all their petrochemical plants and so on. There's a lot of types, so that type of unconventional work in Saudis and elsewhere in the Middle East, just for gas and oil, is producing a lot of big tenders now for Oman, Kuwait, Saudi. Not so much Iraq, but that's all old fields. But a lot of the Middle East is really drawing on high channel count work, and there seems to be an insatiable appetite for channel counts north of 100,000 channels. There seems to be a very strong growth in that market as well. The other parts of the markets, like China and Russia and so on, there's huge potential there, but it tends to fall down to a lot of local players, so it's a bit harder for us to measure. But I say if you're going to pick out two big themes, it's very much, it's a North American microseismic and linking all that up to everything else to understand shale, and it's the Middle East chasing tight gas and so on.
Another question here.
Yeah. Will Davey, I actually put my hand up at the same time as the previous question, so it's judging by the demand of questions, there's quite a lot of interest in onshore seismic market size and the potential and technology development, etc. And if you look at the just the macro picture, the world's largest importer of oil is China, and that's a big onshore seismic market. And the world's largest producer is Saudi, which is a big onshore seismic market. So do you see your excellent research extending more into the onshore seismic area?
Thanks for the compliment. I'm not quite sure about it. I don't think we're quite decent, but excellent is quite strong. But anyway, no, I think the who we cover and what we look at depends on which companies are listed. So if no listed seismic companies under our coverage operate in the onshore space, then we wouldn't look at it in great detail. Now, the main exposure we have to actually is via CDG's Surcell business, because obviously they sell a lot of land kit. Just unveiled a new all-singing, all-dancing land equipment range that will replace the one they've had for a few years. So working from our perspective, working out China and the Middle East is quite important, definitely. The onshore market in China itself, in terms of tracking it is difficult, and it's hard to track the number of wells, let alone what seismic potential there is there. There clearly is a big need for it, but I mentioned BGP. They're the largest part of CNPC that's obviously international now, and by all accounts trying to get into North America as well. But in China, there are probably 3 or 4 other parts of CNPC, all of which are similar but smaller. So there's Sichuan seismic somewhere, and there's 3 or 4 of these things all dotted around China in the various basins. They've been there for quite some time. It's a tough market, actually. But to work out what they do is very difficult. It's not, you might actually, in a couple of years' time, they might be more visible, because some of these big parts of the Chinese NOCs have been spun off. So they listed Sinopec Engineering last year. They might list Sinopec Well Services this year. BGP is a perennial might in 1 or 2 years' time. But so there might be more visibility. But until these things list, the numbers often are a little bit below our radar screen.
Thank you.
Well, thanks very much. Well, I think that's about it. I would like to thank David again for actually what was an excellent perspective. Genuinely.